Welcome to the Commercial Real Estate Show. I'm Michael Ball. We are your source for market intelligence, forecasts, and strategies. You know, I've had a lot of calls from clients and listeners curious about foreign investment in U.S. real estate. And just why is that important? Well, one reason might be the supply and demand dynamics. Remember the laws of supply and demand. If changes in the tax rules in the U.S. and the volatility in some of these countries around the world create the U.S. as a safe haven, and we have more influx of foreign investors, it really could impact values in the U.S. And we're always trying to figure out, hey, where is the cycle going? Where are values going? So today we're going to talk to some experts in the field, get an idea of how foreign investment may impact U.S. real estate. My first guest is Walter Page. He is with CoStar, joining us on the phone. Walter, thanks for being with us.
Thank you.
Well, we appreciate it, Walter. And I know you guys have done some extensive studies with foreign investment in the U.S. So what has been the trend for foreign investment over the last several years?
The trend of foreign investment has been, I would say, remarkable. Since 2010, the share of foreign investment of the investments in real estate have more than doubled.
Wow.
So we're currently at 11%, and so that we've had a doubling in that market share of foreign investment since 2010. Since 2009, total sales volumes of foreign investment have grown on average 60% per year, which is double the 30% pace that we've seen for the broader market. So, you know, we've had huge capital flows to real estate, but especially from the foreign side of the ledger. And it's really been across the board. It's not just in office like it used to always be. It's really across the board. So clearly, foreign capital is tracking to the United States.
Okay, so they like retail, they like industrial, they like it all?
Yes, they like it all. In particular, over the past year, industrial has just ballooned. But normally, industrial is between $1 and $3 billion worth of sales. But in 2015, it was $18 billion.
Wow.
Now, this was driven by a couple large transactions. We had a sovereign wealth fund purchase. Sovereign wealth fund of Singapore purchased an $8.1 billion portfolio from Blackstone. So this had assets, industrial assets in Southern California, Chicago, Atlanta, Northern New Jersey, but it had other places too, and they were paying a 6% cap rate.
Wow.
The Abu Dhabi Investment Authority, in conjunction with a Canadian investor, purchased a $3.1 billion portfolio from Exeter Property Group, based in Philadelphia. And then we also had a large Canadian pension plan purchase a $350 million ownership in an industrial portfolio. In essence, we've had some huge transactions that might be skewing this number, but clearly we've seen a big uptick in the industrial segment.
Yeah, and I guess that's a good sign for industrial real estate, and I guess a lot of people believe industrial is a great place to invest. So you mentioned some countries there. What do you see for the flow of money? Which countries are leading the pack?
So it's a trifecta. I look at it as Canada, our number one trading partner, represented 28% of the capital flow in 2014-2015. Western Europe represented 23%. China and Hong Kong, 14%. And then it starts to whittle down after that. What is also interesting to us is that the Middle East volume of money appears to be slowing, although it's anecdotal right now, and I think that's a direct relationship to the energy market.
Okay, and these buyers, what time frame is this that you're covering?
2014 and 2015.
Okay, and what do you expect moving forward with the changes around the world? Who's going to lead the pack moving forward, do you think?
So our view is that the markets that are being impacted by commodity price declines, especially in energy, are the ones that are not going to be contributing significantly going forward. So that would be the Middle East in particular. But Canada actually could be one of those markets that could be slowed, principally because of the oil sands and things like that. So that's the place where we see less capital coming from. We also expect to see more capital coming from places that people are concerned about safety in their home country, and that can be anywhere from Latin America and other markets across the world.
Right. And is that one of the reasons that they're flocking to the U.S. is kind of the safety that we provide here as opposed to their own country?
Yes. So the last 2 days I was in South Florida, and I was talking to a local broker there, and he says that is like one of the key primary reasons why people invest in the United States is the safety, the perceived safety of our real estate markets. And even though that they've seen increase, the value of the dollar has gone up, the perceived safety of the U.S. economy and the real estate markets trumps that in terms of investor perspective.
Right. We're in talking with Walter Page with CoStar about foreign investment in the U.S. And Walter, which cities are they going to? Where do they want to put their money down?
Well, we used to always think that foreign investors only like they didn't take connecting flights, so they only like the gateway cities of New York, Washington, San Francisco. The reality is they're focused to about 18 markets across the country. The top market for investment is still New York, $13.2 billion of investment over the past year. That's out of the $69 billion that was done in 2015. But other markets that they like, Washington, D.C. was $5.6 billion, Los Angeles was $3 billion, Dallas, 2.6, San Francisco, 2.5, 2.6 out of South Florida, and 2.2 out of Atlanta.
That's good to hear. And if you're not driving your car, go to our show website, and you'll see some slides that really put this in perspective. And of course, if you're watching on YouTube, you're seeing them. So Walter, as I opened the show, I was talking about this increased demand from foreign investment could impact real estate values. What do you see there?
Well, I think that they clearly are. So while foreign investors are heavily focused to what we call core real estate, and they're also willing to pay the top dollar. And what we've seen is that if we look at the cap rates of the foreign investments compared to the market as a whole, they generally have lower average cap rates for those foreign investment deals than the market as a whole. And this holds true across the entire spectrum, and in particular holds true for New York office cap rates, where we would see investors of late, if the market cap rate there is close to 5%, they're willing to pay closer to 4.5% or 4% in New York. So clearly they're willing to pay a premium.
Right, and could that be a material impact? Could that have a material impact on cap rates? I think a lot of our listeners are concerned that rising interest rates, if they do rise, I guess we hope they do, could impact cap rates, but in commercial real estate values. But if you have all this demand and you have the property fundamentals improving, is that going to have an impact?
Well, okay, so clearly, if 11% of the real estate sales are to foreign investors, and by the way, that is direct real estate sales. If you count in the fund investment, it could be closer to 20%. The foreign investors really have a crowding out effect on the rest of the investment world, and in essence lower the expected returns that everyone else has. And so this is part of the reason why we've seen tremendous values across the board. Now, going forward, our view is that this flow of capital will continue to be pretty strong. and that even though we expect to see a marginal increase in interest rates, the Fed is probably not going to be too aggressive on that, and the net result is we're probably going to have fairly stable cap rates going forward, only a slight increase.
Right. Okay. Well, Walter Page from CoStar, thanks for joining us, sir.
Thank you.
If you'd like more information, visit CoStar.com, and we'll have more for you right after this break. I'm Michael Bull. This is the Commercial Real Estate Show. Stay with us. The Commercial Real Estate Show is brought to you by Bull Realty, commercial real estate asset and occupancy solutions. Visit bullrealty.com. CCIM Institute, commercial real estate's global standard for professional achievement. Visit ccim.com/CRE show. Xceligent, providing verified commercial real estate information across the United States. Visit xceligent.com.